Hello, and welcome to our webinar, Maximizing Promotional Effectiveness with TrueNet Cost Analysis. Thank you for taking approximately 30 minutes out of your day to join us. I'd like to share a few housekeeping items before we get started. One, if you'll let us know through the question box if you are experiencing any issues with the audio or seeing the slides. Two, you can ask questions throughout the webinar and we will do our best to answer those at the end. And three, we invite you to follow PRGX on Twitter and LinkedIn to get alerts on our upcoming webinars. Today we are pleased to have Jen Rowe, PRGX's Chief Analytics Officer, join us to share insights on maximizing promotional effectiveness with TrueNet Cost Analysis. Jen joined PRGX in 2019, having 15 years experience. Jen is focused on generating actionable insights for customers that aid in decision-making while utilizing the latest techniques in the field of data science and BI. He has a successful track record of building award-winning source-to-pay and analytics platforms with Accenture, McKesson, and Seal Software. Welcome, Jen.
Thanks, Michelle. I'll take over from here. So quick agenda for today. We're going to be talking about TrueNet Cost, and we'll talk about, what that actually is and how we calculate it and how that really leads into the margin analysis. And really the focus today is, as markets shift and data points and sales and promotional activities rapidly shift, it is more important than ever to have data and insights that enable you to make data-based decisions. And so we're going to be talking about how we really enable and help our customers do that. We will talk about how the technology and analytics really aid in allowing our customers to do that more effectively, more efficiently. And then we'll go through some use cases that I think you guys will find very useful and interesting, especially during this time of uncertainty. So let's jump right in. Just a quick introduction on PRGX. So we are the leader in global recovery audit and analytics, and with our history really speaks for itself. We've been in this business for over 50 years, and really, especially around retail. I mean, that's where we really have trusted partners and large companies and large organizations that really rely on us for their audit activities and help them recover valuable funds from things like overpayments and duplicate payments. And you can see just in the numbers just how much value we help add back to our customer and the services and the value they provide in turn to their customers. And again, we're a global company with services and offices and delivery, all over the world. So with that, one of the great things that's really made available for us are the relationships and the data. And so let's start in with just a quick introduction on TrueNet Cost, because that's going to be sort of the foundation for how we do this analysis, how we do the promotional versus margin analysis, and how does it really help us lead to that promotional effectiveness discussion. So number one is, what the heck is TrueNet Cost, right? And the simple way of looking at it, and we have it divided from left to right. On the left-hand side, we have that simple invoice cost, right? You have your sales, you subtract the cost, and you're supposed to have your margin. That's a simple way of looking at your cost. And oftentimes, that's what a lot of our customers end up using, because the additional data sometimes isn't easily readily available. And for some commodities, some categories, that's okay, that's enough, right? But especially in the retail side, on the grocery side, and especially where there's a lot of promotional activities, and especially where promotional activities change and shift, and you have dozens of different types that run in and out, and for each vendor you have different agreements that have different time frames. Well, that really changes your actual margin, right? So in this waterfall chart, we have a bunch of different ones that are included, like off-invoice allowances, bill back, scan downs, flat funding. But in reality, there are dozens of subcomponents that roll up even underneath that. And what we do is we track each one of that, and we're able to apply that at the product level. So you can see on the right-hand side, we could be looking at the same product and same sales and cost, but on one hand side, without the funding, you have a lower accuracy where you think the product margin itself is 324, but over on the other hand side, if you include all the funding, the cost, and if you include all the funding, the cost becomes 297. So really, it allows you to look at the cost, the margin, and the promotion all really individually and separately, which allows you to measure them more accurately. So that's going to be how we look at the data points going forward. And just to give you an idea how that really applies to the data set, this is a view that most often our customers want to have. And of course, you want to look at all the sales by the different divisions and the departments and the categories and suppliers, and of course the cost as well. But if you look at especially the funding and the adjusted gross margin that you calculate from all the different components, oftentimes that's where they start losing that access to that visibility. It's really fairly hard to calculate the individual funding and margin at the category, vendor, and especially the product level if you don't have the right data model, right platform, and right technology to be able to ingest all the necessary information, have all the data models available to put that together in the right way, and be able to calculate that for the billions of spend and millions of items that you have in your portfolio. So our goal is to allow that and do it very quickly, accurately, so that you can, number one, see exactly what's going on. How is that promotion impacting my cost, impacting my sales, impacting my margin, and also, making sure that we have the right mix between the promotional versus regular, and how is the sales shifting in the current marketplace. So these are all the different comparative insights and elements that we give you access to through our TNC analysis, our TrueNet Cost analysis. Okay, and so the way we do that is, really by our technology investment. So this is a very simple chart of our overall platform that we've invested tens of millions of dollars and years into to make this possible. So again, through our partnership with all of our customers in the audit space, we have access to, just tons and tons of data. And for a data professional like me, that's a great place to start and great place to really grow. And the point here was we've invested a purpose-built mass data technology platform. So we're able to ingest, just enormous amounts of data very quickly, be able to put that in a very scalable platform. We're able to model things in a really large scale. And the most important thing is that it's very cleaned up and normalized and ready to use for us, especially for our analysts to be able to put that together into a meaningful set of data. And then the top layer, Lumen, is where our insights come in. Our goal is to help our customers analyze and visualize that massive set of data that is available for them and make that really useful, make that really insightful and valuable. So what you'll see is sort of the end result, end product of our technology development and our technology investment to make this type of analysis and comparisons possible. All right, so this is why we started looking at TNC, and this is why we started comparing TrueNet Cost and looking at actual margins. Our customers in the past working with us, oftentimes came to us and said, you have access to the data, our product data, our sales data, our cost, and you have been a great partner. So can you help us actually understand a little bit more about what's going on, right? So starting with the simple stuff, can you help us see the breakout of funding across the different promotional types, whether it's rebates, off-invoice allowances, scans, lump sums, bill back? How are they sort of stacking up across one another? Which are we getting the most value from for specific categories or vendors? And then, adding on to that, can we now compare things year over year? Are we getting the same funding from the same vendor and category that we were last year to this year, or is it going up or down, right? For the same category, are we moving in the right direction, or do we have the same rate of funding? And if not, why and how is that impacting our sales and our cost to the customer, and then also our margin? And so with all of that, how can we really help our customers additionally track those margins, look for leaks. And again, for PRGX as a recovery audit company, our goal always is to help us get our customers to the point of finding those leakages, finding the areas where we can improve, finding those opportunities. And so that's some of the examples that we'll give you. And you can see that's our progress and our path toward that promotional effectiveness. We'll be able to really get to sort of how we can even talk about one promotion versus another and see which one was actually better for us during that time or for that product, for that category, and be able to make the right choices, especially when markets are rapidly shifting and we need to really be making quicker and more accurate decisions to enable us to be successful. So let's go through a couple of scenarios here. And this is a typical example, and this is something that we've seen over the last, first half of the year across the industry, right? So this is an example. If you look at the bar chart on the top right, this is a year-over-year comparison. So what we're doing is we're comparing the first 5 periods of 2020 in the dark blue against the same periods in 2019. And this is right now looking at sales. And of course, we look at that by cost and by funding and by AGM as well. But let's start with the sales because it tells a very telling story here. You can see as soon as the COVID event took place and people started locking down, and I think we all remember in the news, people started stocking up on things, and because they're not able to go out to restaurants and bars, they started cooking more in the house. You can see, especially for this industry, where the sales really spiked, periods 3, 4, and 5, right? So overall, over that first 5 periods, sales this year versus last year, up 23%. And of course, as sales goes up, the cost would go up as well. And you can see that we had an 18.5% increase in cost. And then overall calculating, and we'll get to sort of how we're compartmentalizing and calculating all the different modules and bits to get to this number, but our overall adjusted gross margin was up 31% year over year, which is great. So, sales are up, everything is great, right? But that's not really true in every case, and we're going to dive into this a little bit more, dig into this. Number one is we're able to do the same type of very summary level, and we're starting with the summary level analytics, right at the top. You're able to see the performances at the division level for all the division, for all the categories, for all the subcategories, for all the vendors, for all the company groups, for all the countries and regions. So know that everything that we're showing you is divisible by any really combination of dimensions and entities that you will want to look at this at, okay? And just a quick note on the table for this AGM scorecard, immediately we can, start to see that scan down as a percentage is actually down for the year, and flat funding is down. So yes, overall, things may look like everything is up and up, but there are going to be components, number one, that we're going to find that where the performance is actually not the same as last year. Comparing apples to apples, we're actually down as a rate. And also, not every category is going to be behaving the same way. This is an aggregate view. So overall, we're up. But we certainly want to find those vendors and categories where there are negative impacts and be able to really focus on those guys as well. So, this picture really kind of helps us see, what's really going on underneath the surface. So on the left-hand side, you can see at the very top, sales is up and cost followed along and tracked along pretty well with it. And looks like the margin tracked pretty well along with it. And the funding is, again, not as sharp as an increase, right? You can see that funding remains sort of relatively flat overall instead of tracking up and going up with the sales and the cost. So that's one thing that we'll certainly want to look at. And in fact, if you start comparing this from an apples to apples comparison, what you'll know that if we keep the sales flat, right? If we sold the same amount this year as we did last year, what does our rate look like? Then now you can start to see that cost is actually starting to go down a bit. You can see that the margin is up, but because that's the cost, because the cost went down, but also the one thing that we certainly want to focus on because there's an opportunity is that funding is down. So these are the areas that we'll want to find, dig into, research, and this next picture will start to kind of give us an idea of how we do that. So we have about half a dozen ways of really identifying where the major gaps are, major decreases, increases, trends, etc. But for this presentation, we'll focus on this one picture that I really like. Just kind of it combines multiple ideas into one and helps us find our target very, very quickly. And I've even circled it just to kind of start. But the idea here is that on the y-axis, we've plotted all the things that have to do with funding. So on the top of the screen are where all the funding rate increased. On the bottom, where the funding rate decreased. On the right hand of the picture, all the dots in green is where your AGM rate is higher than last year. So all the good news. And on the left-hand side, your AGM rate has decreased since last year. And so funding up, funding down. So you can see there are more categories that have less funding than last year. Very clearly tells that picture. Overall, the AGM shift is actually fairly even, but we're trending more to the right-hand side. And the part that I really want to focus on here are the things in the third quadrant, the bottom left, because these are the categories where, number one, we lost funding, and number two, we lost AGM, right? And so that's the area that I want to focus on. And in this case, the bread is one of the ones I certainly want to dig into. Why is that going on? What product or what vendor is really causing this picture? How do we really dig into, so the great thing is after we select this, we're able to get you down to not just the vendor, but also down to literally the UPC level. So you can see the performance at the UPC level, exactly which product and their pricing and their funding and their margin is essentially adding up to this picture. So that's really the powerful element that we're introducing, is you're able to do this really quickly in a visual and interactive way, but be able to get to the information that you're looking for, the things of interest, the areas that is essentially causing some of the trends that you're seeing. Okay, and just to round out the picture, the size of the circle again represents the size of the sales. So certainly the bread is a big circle that we do want to touch on. Now, on the next picture, this is all about really digging a little bit further into funding, making sure that again, as a relative percentage, how is funding doing? And again, this is sort of a picture that we've seen really commonly through the last few months. And so this is a very simplified table just to sort of illustrate what's going on. But you can see here, sales has gone up. In this very simple example, 25%. Cost is also gone up 17%. Funding, funding went up, right? But the problem is that it hasn't gone up just like we've seen in the other pictures prior. It hasn't gone up as much as the other guys. It hasn't gone up as much as the sales and the cost. It's lagging behind. So when you take that information where things look like it's still trending positively, but just not as much in terms of the rate, this chart below really helps illustrate that. So you can see the 2018, 2019, the full lines at the top is fairly consistent overall and tracks pretty evenly throughout the year. But what happened in 2020, you can see very easily that funding started to really drop off, especially into period 3, 4, and 5, and it's going lower, and definitely something that we want to take a look at. And this picture and this analysis has led to the additional insight into, so how is our pricing and the promotional elements changing with some of our key vendors in our key categories? What does our mix between our promotional and regular products look like? How is that mix shifting, and how is that impacting our overall margin and overall units and overall health of that category? So you can imagine this idea of knowing how the funding and AGM and others are tracking. We can start to really identify where we want to focus on, where we want to pay attention. Okay. And this is a picture of, kind of the tabular information that we get into. And, the main point I want to point out here is that the main thing that we want to do is be able to compare things apples to apples. And there's two ways mainly that we start, and there's many different lenses that we add on, but two are the most important. So especially like, the first table, like this year, where we see these giant increases in sales, it's important and imperative that we're measuring those rates and measuring those at the unit level so that you can, even when sales is dramatically up or dramatically down, that it doesn't skew our perspective and doesn't skew how we're really tracking the effectiveness and the performance of each individual element. And so, that's why we introduced the relative change, which is as a percent of sales, the rates, and also the unit values. Per unit is my sales going up. Per unit is my cost going up or down. Per unit, how is my funding doing, and how is my AGM doing? So these are some of the way we really break down the data so that you can compare last year to this year, even when the sales are dramatically different, even when the units are dramatically different, but we can start to dig into each product and each category, each vendor know, are we actually going up or down in terms of impact and effectiveness? Okay, so with all of that, the main point is to give you the tools and give you the visibility to your fundamental elements that make up your margin, right? At the end of the day, for each product within each category, vendor or country or currency, what the sales is, what the cost is, what the rate of funding is and rate of margin is. And thus, our goal from that point is to help you identify which promotions work better or worse. And that's the idea of promotional effectiveness, right? TrueNet Cost analysis, basically the point is to give you the true margin of products so that when you are comparing even the same product across multiple promotions or multiple regions or multiple stores, however you look at it, however you want to look at it, the idea is that you can compare apples to apples, and you're including all the relevant ingredients into that analysis so that when you do compare margins and when you do compare promotion, that you are able to see which one actually increased your sales or increased your margin. So let's take a look at a couple of examples of how we enable that. So the picture on the left, basically the main point here is that each dot represents a promotion. Okay, so this is a picture that, just as a representation, we put in each dot essentially represents a promotion. And basically, if the further right you go, the more sales you got. And higher you go, the better margin you got. So in this case, you can see the ones all the way to the right and to the top, whatever those are, those were the best promotions. Those were where we essentially had the greatest sales increases as well as greatest margin increases. And of course, sometimes promotions with all, good intent, doesn't produce that. So you can see, interestingly, there are promotions, whether it's just, fluke or depending on the product or whatever happened, there is a small subset that, that resulted in reduced sales and reduced margins. So you can see those on the bottom left in third quadrant as well. But one of the things that this picture sort of clearly shows is that, the increased sales and increased margin are often tied with promotion. And so it's very important to, obviously, that's why we run it, and that's why it's important to look at it. And you can see that sort of the linear relationship that happened, especially in this category that we're looking at. The picture on the right is a slightly different picture. So, in terms of, again, each dot represents a promotion for a product, for a category, for a period of time. And the further right you go, the higher the uplift in quantity and the percentage. So the more sales you had. And essentially on the y-axis, the higher you go, the more promotion we actually we provided. So the higher you go, essentially, the higher, the greater the percentage discount. And so in this case, one of the things that we want to sort of pay attention to is that you can see sort of that clear line that's created right above the zero line, where we have this, really large increase in quantity and increase in sales, but not a huge decrease in terms of the promotional discount. That's an area that we actually dug into and we wanted to look at. We wanted to see why and how those promotions were so effective, even with not such a great, percent discount. What was actually going on? What type of product was it? What type of promotion was it? When was it run? These are all different things that we can dig into because we can sort of identify some patterns and trends that become important. And so I'll finish out with a sort of a simple picture. And again, we get really deep into this, but of course, the point for today is to sort of introduce the idea of TNC and how we use that to really get to these type of analysis. And so, this is a quick chart, very simple chart to demonstrate how we use that information and how we start comparing the different promos. So in this case, we're comparing the non-promo item with 3 different promotions, okay? And essentially we're recording the sales for each week. And in each of the 3 promotion cases, there was an increase in sales. It went from 41,000 to 62, 134, and 68,000. Great. So each one of the promotions at least drove up sales. Now, the price for each of the promotions, you can see, the non-promo price is $497, but promotion 1, 2, and 3 reduced it down to a sale point, and you can see promo 2 has the lowest price and had the greatest amount of sales. But of course, for us, really the important additional factor that we need to include into this is the promotion rate itself, and thus the calculated adjusted margin. And in this case, again, going through all the calculations, at the end, we're able to identify the actual margin percentages, 30, almost 50%, 13%, 42%, and then actually calculate the total margin in terms of the dollars, right? 61,000, 124, 56, 116. So depending on what is important to you for that promotion, maybe it's volume, maybe it's actual top line revenue, or maybe it's growth, or maybe it's the total margin dollars at the end of the day, you can select what works best for you and what you want to do. So again, the idea here is database decision making and getting to the lowest level details so that you can look at effectiveness and trend in a meaningful way and be able to really use that for how you progress forward, using seasonality, using the right product selection and product mix, using the right promotion to get the right margin or the increase in quantity sales. So these are all the different things that we make available for our customer partners and the buyers to do what they need to do. So with that, I'll summarize and we can end this session today with some question and answer. So just a 3-point summary here. Number one, obviously, as we all are aware, and I believe that, the usage of technology and data is just, it's a prerequisite at this point. But, that's where we come in, our group and our company comes in. We have access to the right expertise and technology to really make this work for our customer partners. And especially, today where the sales and the industry and the market and buyer buying habits is changing incredibly rapidly. It's imperative to see those changes over time and make sure you have a handle and visibility to what's actually changing, how is it changing, where are the areas that I need to focus most on. And then, of course, from an effectiveness perspective, using our concept of TrueNet Cost and TrueNet margin, and you can essentially make the best decisions most accurately and timely on these promotional effectiveness and, maximizing the margins. And we allow that in the quickest time possible and in the most accurate way possible. And the great thing is we're continuing to just get better and more accurate and faster as we do this more and more. So I'll stop there. And if Michelle, if you can take over the Q&A and ask me if any questions have come in, we'll try to answer those now.
Sure. Thanks, Jen. We did receive a couple of questions. So one, how long does it take to implement this type of a platform?
Yeah, so one of the things that we certainly need to do when working with our customers is make sure, number one, we get the right data. So we need your cost data, we need your funding data, we need your sales data, we need it in the right format. So getting all of that. And then for us, we need to make sure we're mapping all the right category hierarchies and, vendor grouping and make sure all that's mapped out. Then, each customer has a different set of funding rules and how they allocate. So we put that all together. So getting that up and running, the initial setup does take a few weeks. And our range currently, depending on your complexity and your size, does definitely run between 8 to 12 weeks. So, but, in terms of the big picture and longer term, it's fairly quick. So we're able to, at longest, usually get our largest customers up and running in less than 3 months. So that's sort of our lead time to get up and running. But once it's up and running, we refresh on a monthly basis. So we take the sales data and the cost data and funding, all that information in on a monthly basis so that it refreshes so that you have an ongoing active view of that.
Okay, great. The next question, for our global organization, can I compare values of the same product across regions, countries, and currencies?
Yeah, absolutely. So in terms of countries, we can handle basically any currency. We do normalize to one currency so that you can see things, again, apples to apples, making sure that, you're comparing the same product using a normalized currency. And actually that normalized currency, that view can change to multiple perspectives if you wish. So for example, you can look at everything at a converted USD level or everything at a, British pound or euro. So you can look at it, from a different perspective. We normalize all of it. And what rates we use for multiple countries, we can update that on a weekly, monthly, set fixed rate basis for your financial accounting. So it's really up to you and how you normally view those differences and changes across your organization. And yes, in terms of each product, basically, I want to see this product by my different banners in this country or by the different countries or by different categories or vendors. That's really, at the end of the day, the goal is to be able to compare, not just across categories and vendors and time period, but, especially down to the product level.
Okay. And we do have one more question. Is this something that's only useful during a time of a pandemic like COVID?
So no, and so we actually built this tool for normal times where, again, normally your sales changes, your buying habits of your customers and your product portfolio and your vendor and the relationship, it constantly shifts over time. So no, we actually designed this for the normal times, but then when COVID hit, it became increasingly more useful and valuable for our customer partners, especially because sales fluctuated so wildly and the promotional versus regular mix changed so greatly, and the way that people, way that we were costing things and promoting things, that behavior just completely changed. So it was really useful in this time. And imagine next year, if and hopefully when we go down to sort of our normal levels, back to 2019, 2018 levels, if that happens, you're going to see another great shift in terms of the changes. So that's where this will be even more valuable to make sure that we can compare the rates between 2018, 2019, 2020, and 2021, and make sure that we're setting the right targets for ourselves and for our vendors, and so that we can make the right decisions on how we promote things, how we fund things, how we set the margin targets. So no, I guess the simple answer is no. It's actually useful in a normal time period, but especially so when the market is dramatically and rapidly shifting.
Okay, great. So that concludes the questions that we received. So just would like to thank you all for attending our webinar today, and a big thank you to you, Jen Rowe. As a reminder, this recording will be added to the PRGX website along with all of our other on-demand webinars. We will also be having some additional webinars upcoming over the next few months that will be covering topics including recovery audit root cause analysis, self-funding audit contract programs, as well as source-to-pay acceleration roadmaps and spend analytics. If you would like to know more about TrueNet Cost analysis that Jen covered today, or to speak with a PRGX expert, please visit our website, prgx.com. And again, thank you for joining us today. Have a great day.